From Washington, this is the HPS Macrocast with Hamilton Place Strategies and Markets Policy Partners.
Good morning. It's Friday, September 24th, and you're listening to the Macrocast. This is Tony Fratto in Washington, D.C. We have our regular team of Brendan Walsh and John Fagan with Markets Policy Partners, and our very, very special guest, the great Bob Dohner. I know John and I were colleagues of Bob's at the Treasury Department. Bob was there for how 20 years, Bob, maybe right
23. Yep.
23 years. I got to work with you for a nice chunk of that, and a lot of it on China. Bob was a deputy assistant secretary, I know, for East Asia. I met Bob when he was, I think I met you in Japan, right, in Tokyo, in 2002 or so.
On 9/11.
I wasn't on the 9/11 trip.
Oh, okay.
I came on a separate trip with John Taylor sometime afterwards, and I think I met you. I think that's where we first met. Yep. And so in Japan, and it's one of the first of all, just one of the smartest economists that I've worked with, a wonderful policymaker on a whole range of issues. And largely, we worked on so many issues relating to China and East Asia. All the East Asian nations, and he worked a lot of work on APEC and ASEAN as well, on the India dialogue. So many things that we that I had the privilege of working on together. But even more so, and the things, the great benefits, I think John would agree, of working at Treasury Department with great people like Bob Dohner, how many of them were just wonderful teachers, and I feel like every time I was in the middle of some complex issue with Bob Dohner, he was not just talking about the issue and it was, what was going on, but also teaching about the issue. And I always came away much smarter after spending time with Bob. You all listening to Evergrande end up much smarter too. And so we're just so lucky to have you with us. You're at the Atlantic Council now.
That's right.
Yeah, and so we're privileged to have you. And then on this day, so much happening right now with China, really in the news. We have the Quad meeting that President Biden is hosting with Modi from India and Japan, Australia. Here for meetings. We have the Evergrande, the evolving Evergrande issue, and the direction that China is going with we could call it a crackdown. I think crackdown actually minimizes what exactly is going on in China. There's a lot there's a lot happening on many fronts in China. But this goal of common prosperity seems to be their guiding principle on this. There's so much we could talk about with China, but why don't we start there, Bob, and get into the range of issues related to China today in this pretty important period.
Oh, thanks, Tony. That's a very kind introduction. I hope I can live up to it. So let me start with Evergrande. The Evergrande situation has been developing for about a year, ever since the Chinese authorities tightened up restrictions on leverage in the property sector. But it erupted into a financial market that was already skittish about a series of abrupt, unexpected regulatory interventions across a whole range of Chinese industries. Now, all Chinese property companies are leveraged, but Evergrande was super aggressive in borrowing. It went from, in the space of just a few years, from insignificance to become the most indebted property company in the entire world. Now Evergrande is almost certain to fail and be restructured. This is a technical, it's an economic, financial, but it's also a political problem for China. And to see why, front of mind in China is the October 2022 National Party Congress, where President Xi will make his bid for an unprecedented third term and possibly to become China's president for life. His campaign platform is Common Prosperity, which is a kind of Build Back Better for all Chinese program. It promises reduced inequality, more affordable housing, greater access to higher education, and also relief from a private tutoring arms race that has consumed urban households recently. It involves anti-monopoly actions against big tech companies that stifle competition and restrict entry. And it also involves having the rich give back more to the society as a whole. Now here, Evergrande presents a huge problem. There are about 1.5 million Chinese households who have already paid for housing units that Evergrande hasn't completed building. Housing constitutes as much as 70% of the assets of urban households in China, leaving them really exposed to any drop in housing prices that would occur from a fire sale or Evergrande, or more broadly if other property companies are affected. There are about 80,000 individual investors in China who have invested about $6 billion in Evergrande's financial products. And Evergrande is also a huge employer, both directly and through its supplier companies. Now, the outcome here won't be an abrupt default or collapse of Evergrande. And it won't be a bailout either. Creditors, shareholders, managers, and particularly the founder will also take hits in the process. It will be an engineered restructuring and workout with an emphasis, I think, on assuring that the promised housing units get delivered to the households who paid for them. Emphasis on retail investors and also on preventing contagion of the crisis to other property companies. It's not the beginning of a Chinese or a global financial crisis. It's not a Lehman moment. Evergrande simply isn't large enough, it isn't interconnected enough, and foreign exposure is pretty minimal. But it is an economic problem for China. The Chinese economy is already slowing faster than expected this year. Property, both directly and indirectly, provides a huge portion of GDP, probably as much as 28%. And housing unit sales are already down about 18% this year. What you're likely to see, I think, is one of those situations where the Chinese tighten policy for an objective until it begins to get too painful, and then they loosen again, particularly in this case for other property companies. This is going to be a difficult technical problem for China, both given Evergrande's size and its spread across the provinces of China. That it's clearly going to be a crisis that will focus the minds of Chinese policymakers.
Bob, when you talk about, I was thinking about the contagion piece of this, and I was, there isn't enough connectivity, not enough financial product integration in China and outside of China, to their detriment in some ways, except when you have, giant companies collapsing. So the possibility of global contagion, just I don't see it, there either. But I was curious about the other, the Chinese property companies and sort of, internal contagion. What are the other companies, that are close? And is Evergrande an outlier relative to the other large property companies in China, or are they doing the same things?
So Evergrande is an outlier. It borrowed much more aggressively. The Chinese government set down 3 red lines, basically debt to various ratios. Evergrande missed all of them. My sense is that the other property companies are in better shape, certainly better with respect to the red lines. They would be affected, though, if there's an expectation that property prices will decline generally and that you're better off waiting to purchase a housing unit until it gets cheaper in the future. And that threatens the whole sort of borrow to build kind of model of property development in China, and in fact, a lot of East Asia.
The political problem is interesting. I think it's, for people who don't really follow China, and see the strong hand of Xi and the one party state, don't really understand that there are real political problems, and there is that potential. What's your expectation? I guess it's going to be dependent on what the fallout looks to a great degree, right?
My expectation about how the political process will respond.
What range of possibilities for impact for Xi? I think I don't think you're taking back. My sense is your expectation is that Xi does achieve at least a third term, if not president for life, or great leader for life. I think that's sort of a base case expectation right now. What would it take to upset that? I think it would have to get a lot worse than what we're seeing, right?
So it would have to get a lot worse. President Xi has argued that he's the only person who can guide China through a set of challenges unprecedented in 100 years. And so his stewardship of domestic policy, domestic economic policy, and also foreign policy is really important. There is internal opposition to President Xi. My feeling is it's largely in abeyance, but he clearly doesn't want to have a crisis of competence going into the National Party Congress next year. In terms of political process, I think it's mixed. I think the Chinese are very good at keeping their ear to the ground, gathering information, and particularly trying to at least learn about and possibly stave off what they refer to as mass events, as protests. One thing that has made them more vulnerable, I think, is the centralization of power in China currently, the desire to please the president, and also the shift towards more leftist or even Leninist patterns of political mobilization and campaigns. And I think you see this in the kind of abruptness and unexpected nature of the regulatory interventions we've seen.
We saw that this morning, right, with the announcement on crypto, right, that essentially crypto's legal for, or no longer legal for settling accounts in China.
Yeah, sorry.
Yeah, Bob, do you draw a line between some of these crackdowns on crypto and what's happening in Evergrande? Obviously, if you're a Chinese policymaker, you're concerned about capital flight is one of the hallmarks of a major problem in China. And if capital flight were to occur, one would assume that cryptocurrencies would be the venue. Is this, or at least one major venue? Do you align these two policies in that way, or do you think they're quite distinct?
No, I think that's right. I think they are concerned about crypto for illicit finance, for criminal activity, and also for capital flight, as well as for the energy consequences. So I don't think it was a coincidence that they came out with the announcement this morning.
And just relatedly, although your assumptions make a lot of sense, and that certainly would follow the playbook of past issues. Big companies, big prominent Chinese companies having a big problem isn't necessarily an unknown situation. We've seen HNA, Kaisa, not necessarily as large and potentially as systemic as Evergrande, and not as close to the heart of the Chinese economic, property-centric economic model. But this is something that the policymakers surely have a playbook. What kind of developments over the coming weeks and months would you see that might change your view and ratchet up your perception of risk, or get a sense that maybe this is getting away from the policymakers in China?
So the things that I would look for, ordinarily a failure like this would largely be handled on a provincial basis. And you can already see the provincial authorities being mobilized to deal with Evergrande. The problem with Evergrande is that it spreads, they advertise across all the provinces of China. And therefore, you need to have some coordination among the provincial governments. If that coordination breaks down, or if there are clearly inconsistencies across provinces, that would be a problem. And, as we talked about earlier, any sense that other property companies are also in financial difficulties, either because of their situation or because demand for their construction projects falls off a cliff, would also be something to keep an eye on.
Do you think the renminbi would act as a tell, particularly the offshore renminbi, which can behave maybe a little bit more out of line with what Beijing has when Beijing tries to stage manage the currencies?
Possibly, although you would have seen it this week, and you really didn't. I think this is going to be largely a domestic crisis and probably not reflected in the exchange rate. That's funny. When we were at Treasury, we never talked about exchange rates, and therefore we had the luxury of never having to talk about exchange rates.
You mean publicly, of course. When the doors are closed and the cell phones are sitting in the cabinet outside, a whole lot of discussion about exchange rates.
That's right, exchange rates and personnel, right?
We believe in a strong dollar. Strong dollars and national interest.
Right.
Exchange rates should be set in open, competitive markets.
And statements speak for themselves.
Bob, one of the things I was thinking about, especially with this, the Quad meeting that's happening today, which I think it's more hope than action right now. I think. I mean, we'll see. And I'd love to get your thoughts on that. But the broader question is about the tension on China since its emergence into the attempts at achieving market economies and coming out of the 90s was this tension of opening opening enough to be accepted in the global political and economic community in ways that the rest of the world is comfortable with, versus its some of its internal politics that pull it towards it is a communist country. You talk about it in Leninist leanings now in a lot of ways. So that's been the tension. And as the broader world has wanted to see economic growth and development in China for its own benefit and the global benefit, but doing it the right way and doing it in ways that are more aligned with Western values, both economic and political. So the effort to try to do that has had varying degrees of success or failure. We were there together for the creation of the Strategic Economic Dialogue, which was a bilateral effort between the United States and China, the two biggest and most important economies. There have been multilateral efforts as well. One of them is TPP that we initiated and have so far declined to participate in. But now this Quad. I mean, do you have thoughts on what are ways to try to influence change in China to pull them back? They're going in a directionally different way than we hoped today. What are the best strategies to try to pull them back? Is it by being tougher, or is it trying to be more encouraging?
So that's a really great question. It's also a really difficult question, and it hits at the point that I think is the biggest risk of where we stand now with China. I mean, as you say, we moved from a period of optimism about Chinese economic and political reform, about integrating them in the global economy, and a sense that would be good, would benefit both the United States and the global system. We've now moved, for a variety of reasons, towards thinking that the Chinese economic system is incompatible with and in many ways a threat to the global system, and that China is a political and strategic rival. Its practices for acquiring technology and developing industries are an economic threat and a strategic threat to the United States. I think the Trump administration and their China team really gave up on the notion that Chinese behavior was something that could be influenced. Mm-hmm. China could only be confronted or prevented. And I think to a large degree that's been carried over into the Biden administration. So on both sides, attitudes have hardened. There are really no off-ramps to develop. There's no, if you do this, then we will do this. Yeah. I don't think environmental cooperation is strong enough on its own to offset the other dynamics in the relationship. So it's a question that I often ask myself, and I don't have a good answer.
Yeah, I'm not sure that anybody does. I mean, I think that it sounds like that's where we found ourselves pulling apart. And to me, the greatest risk about that you have constant tension. We have tension with like-minded Europe, right? Where we're much, much closer. I mean, you're always going to have friction in relationships to a certain degree, but the frictions are pulling further apart and more rigid, yep, as you said. And the problem not having really good lines of communications and processes for working those things out is that those kinds of things actually break in hard, destructive ways. And so that's, to me, like it seems like the great risk with China. There are short-term economic risks from inefficiencies and the inability to all the benefits that we think about with allowing people and capital and to move across borders in ways and ideas and more openness. So you miss those. But to me, the great risk with China is that it blows up, that it doesn't, when those relationships break down, when there are problems, there are hard landings, not soft landings.
No, I think that's right. One thing, I mean, we had developed protocols with the Soviet Union on military interactions that were largely risk reducing. I don't think we've done that with the Chinese. And so the chances of an incident, granted it's likely to be naval and sort of over the horizon, is just much greater with China than it was with the Soviet Union.
That's really interesting. If you think about it in the Soviet context, and obviously we're not talking about nuclear war with other kinds of breakdowns, but we did go through that period from near the end of World War II until around the Cuban Missile Crisis, where we didn't really have great protocols, and there were a lot of misunderstandings and close calls and problems, whether it was Hungary or Cuba or other or Berlin and other Turkey and other relationships that we had. So it's actually a really interesting analogy, because we may be in that interim period also where we're trying to figure out those rules. Because if we conclude that China is going to be the country that it is, it's not going to move closer to Western standards of economic and political life, ways of living, then we're just going to have to live with it for some period of time. We may be in that period we are going to have to write some of those rules and what it means, because you don't want it to result in bigger problems. The problem is that Chinese are testing all of this in lots of different ways. Culturally, they're testing it. The South China Sea, Hong Kong, Taiwan, North Korea, its relationships with Japan, India. So there are security issues, economic, cultural, that are where they are pushing and testing their neighbors and trading partners. And so it's the solutions on a lot of those areas are not easy. They're hard. The cultural ones, I think, are in a lot of ways the most the most difficult because we can't affect much in China, and then you run into the thick questions like, well, what about, do you go to the Olympics? Do you allow them to have a grand event in Berlin while all of these other things are going on? Do you participate? Is that, those are the kinds of questions that you end up having. Do you further isolate them, or do you take those opportunities to try to impress upon them the importance of moving closer to the rest of the world?
So two things strike me. One is we ought to go back to the previous practice of having a whole bunch of low-level dialogues with Chinese on a variety of issues, but I think particularly on military issues and military protocol issues. This is not the time that you can have a big overarching strategic dialogue with the Chinese. We just don't have the necessary optimism or tenor of relationships. The second thing that strikes me is that we should have enough political will and courage to demonstrate that we're confident, of our own economy, our own political system, to welcome Chinese visitors, many Chinese academics, enforce rules on espionage. And also, I think the Chinese do test, and it's important for their tests to be met in certain circumstances. And I think the U.S. Australia-UK agreement is a huge deal because it really is Australia casting its lot with the United States. And it's a clear consequence of the sort of aggressive diplomacy that the Chinese have undertaken.
I was going to ask you about that deal, and obviously, it's the strategic importance of it is pretty clear, and it does make a lot more sense, even for the United States, right, to be on the right side there. But if I don't know if you get the every single tip sheet I get, from 3:00 in the morning until 5:00 in the morning from Europe. Has been French consternation over the deal, and pretty hard feelings about the way that played out, including in New York at UNGA this week. We saw some of that as well. But I do think it's those kinds of arrangements where it becomes very, very clear to China that if you're going to force your neighbors to pick sides, they're going to pick sides with the United States, and even as we've done a lot to test our allied relationships over the years, not just during the Trump years. We've done a lot to test those relationships. Those are still stronger relationships because they're based on this common understanding of what political systems ought to be. What are the range of acceptable political systems? What are the range of acceptable economic systems? And so we just have so much more common ground with these countries. So if China's going to push countries to choose, they're going to choose, and it won't be China.
Yeah, no, it reminds me of a quotation from Lee Kuan Yew about U.S. power in Asia. It was an argument that the United States would always have an advantage or outsized influence relative to China because it had a better story to tell. Mm-hmm. And one of the things we need to do is make sure that we continue to have a better story to tell.
Bob, one of the stories was on TPP. I think ended up, for whatever reason, didn't get told well enough to get now two administrations uninterested. Do you have any hope that maybe we can find a way into it? I mean, I tossed out an idea of a solution that we essentially we become the TPP plus one, so we don't actually join the TPP, we do a plus one, so if Biden could say he didn't join the TPP, we just have a special relationship with the TPP, maybe that's a way to do it.
TPP is still a hard lift.
Yeah.
One thing that strikes me is that U.S. trade negotiations, U.S. trade liberalization, has always been driven much more by the fear of missing out than it has by the inherent opportunity of reducing trade barriers. We entered the Kennedy round because of the formation of the common market. China's bid to entry, shakes up U.S. views of TPP, particularly on the strategic side, political side. I don't know if that will be enough. China itself has a pretty hard lift getting into the organization. But what we've always done with a transition from administration to administration is said, I looked at this agreement, it was unacceptable. And so I renegotiated the agreement, and now it's a good agreement. And then you make your entry, and possibly.
Yeah, I hope so. I mean, not that it's the there are no silver bullets or single efforts that will work, but you do need a collection of them. We need to be doing lots of different things to make sure that it's united, arm's length messaging to China to have any chance, I think.
The last question I would have, it's been a fascinating discussion, and obviously there's so many more threads in talking about the regulatory crackdown that you alluded to in terms of the common prosperity and what that means, and of course the typical understanding is that behind it is a broad intention to reassert state power, and it's not just about giving money back to the so big data, and obviously the renminbi is an extension of state power now, and competing obviously pretty vigorously in the fintech and digital payments space. When you take a step back and look at this regulatory offensive by Beijing, is this something you think really is this a bit of kind of showcasing the common prosperity approach before the People's Congress, or is this the new reassertion, a long arc of state capitalism reasserting the state over the capitalism?
No, I think it's clearly a reassertion of state direction of the Chinese economy. That's been the characteristic of the Xi administration since 2012. And an increasing emphasis on national security pretty much in every economic policy, which is also something that supports centralization, and a clear desire to make sure that the Communist Party continues to run and direct the Chinese society, and no competing power centers emerge. So common prosperity is a part of it, but it's certainly not the whole deal.
And just lastly, I don't want to be alarmist, but certainly you hear voices like this from China watchers, long-term China watchers, saying this is all leading up to something. This is the reassertion of state control, the unprecedented third term for President Xi. This, battening down the hatches, so to speak, is in their, geostrategically minded approach, is leading up to an event. And of course, when they look at the map, that they circle a particular island off the coast of China. So, do you have this this mental model in the back of your mind as well, or is this something that is it should be characterized as premature or alarmist or what have you?
No, I don't. I don't have that mental model, and in large part because I think it's to a much greater extent about China, about the domestic economy and political system, and about the Communist Party's role in China. The assertion of Chinese power is both something that great nations do, but it's also part of a desire to gain respect for China internationally, and also make sure that China influences international rules international events. That's hardly unusual for an emerging power. But I don't think that this is all build up to some major, potentially awful event.
Or at least not necessarily so.
Or at least not necessarily so.
Yeah. Can I add, close it to one last question, Bob, which is the not China question, but certainly related to China, and as we have the Quad in town, is India. There's always been this view that this other, most populous nation in the world, potentially, huge market to rival China's, if done properly. Has never really done it properly for lots of different reasons, and never been able to achieve the levels of rapid growth that China has. I mean, you can look at India sometimes, and whereas you look at China and say, there's the problem of not enough democracy, and you look at India and say the problem of maybe too much democracy. There's just more newspapers, political parties, outlets for democratic action. Sometimes in any of the numerous states of India than you have in China sometimes, but it hasn't lived up to that level of the rapid growth that you would love to see, and you'd love to see it for the good of elevating standards of living in India, but also as a strategic counterweight globally and in the region. And do you have thoughts on should we be optimistic about the direction of India, or and looking at the Modi government and what they've been able to do?
So I have lots of disparate thoughts about India. One thing that's
appropriate,
that impresses me is that Indian democracy in total is really stable and has been stable for decades. It's a political system that I think is much less fragile than China's political system. It doesn't perform as well economically as China. I always thought when I was at Treasury, I still think that if a country could put together 5 or 10 years of good macroeconomic policy, it would just have a huge effect. And that's what India did when Singh was finance minister. And I think really hasn't repeated since. It's a difficult partner internationally. And I think we've always found it difficult to get India to sign on to cooperation of any kind internationally. That's part of the reason I sort of took note when I noticed that India, along with Japan and Singapore, had welcomed the Australia, UK, US agreement. I think it's going to continue to be a difficult international partner. And I think it'll be a while before they put together another good run of economic performance.
Well, on that optimistic note, India's where it has been. I think you're right. I think they have work to do. It would be really good to see, again, not least of which because of I would still say that in terms of in fact, that's clear in any one country in the world. No country has more people that need that would really benefit from that growth than India.
Absolutely.
So getting it right would change the lives of in a positive way for hundreds of millions of people, and so we have to hope that they do. But it would be good for a lot of other reasons as well, regionally and for America's interests.
Oh, absolutely.
Bob Dohner, it's been amazing having you here. It's so great to talk to you again and be able to talk about these issues again. It's you really made my week.
Oh, thank you, Tony. It's been a great pleasure talking to you, to John, and to Brendan.
I think one of these days, I think I want to get do a broad Treasury a broad Treasury call from this. I'm gonna get all the deputy assistant secretaries that I used to work with and see if I can get you guys all together on one Macrocast. I think would be a blast.
It would be great fun.
All right, Bob. Thanks so much. Thanks for being on the Macrocast.
Yeah, thank you.
Every 2 weeks, HPS measures U.S. adults' feelings and expectations for the economy. The Civic Science Economic Sentiment Index, powered by HPS, accurately measures movements in overall national economic sentiment and provides a more sophisticated alternative to existing economic sentiment indices. To learn more, contact us through HamiltonPlaceStrategies.com.
Back on the Macrocast, guys. That was so much fun with Bob Dohner. It was just such a treat for me and I think for you guys too. What do we got looking ahead to next week?
The big ones are we have personal income and spending, but within that report also comes the Fed's preferred inflation measurement, the PCE price index, specifically the core, which strips out food and energy. So that'll be the big one to watch. And then we have a couple of elections, one in Germany.
What are expectations on that, Brendan?
So we have been running. So the CPI comes out first, and a lot of the numbers within the CPI are also put in the PCE, but the weights of them are different. So the CPI always tends to run a little bit above the PCE. So the core price index on a year-over-year basis, the headline has been 4.2%. And the core has been 3.6%. So both are actually expected to come down a tenth or two. A lot of that has to do with the base effects. But the Fed targets 2% core PCE. So we are obviously running above it, but a lot of that has to do with supply chain constraints, which the Fed has kept repeating is transitory, and it actually does seem to be transitory. But we're also seeing within a lot of both some of the data with the manufacturing, but more importantly, companies are reporting they're bringing down their expectations for the coming quarters due to the supply chain constraints. Costco is limiting what they can buy. Nike just put out lowered expectations, and it's simply they can't get the goods to sell.
What else we have?
So we have a German election, which is kind of a big one. The end of Angela Merkel's, I guess it was 16-year run. And then in Japan, the LDP has an election.
Yeah, and whoever wins that's going to be the prime minister, because the LDP just is the political one-party rule.
And in Germany, we're expecting Olaf Scholz.
That seems to be... but you never know. Markets are definitely paying attention to the German election, just because it's a big change. It's been so constant for decades.
We'll come back and talk about, maybe we'll talk about both of those next week once we have those in the books. I mean, the German election's been on the horizon for a couple of years now. I feel like I've been pointing towards a German election, and so then it'll be in the book. So maybe we'll come talk about that in Japan next week. All right, guys.
Thank you for listening to the HPS Macrocast. Please remember to subscribe, rate, and share.